Bitcoin is not moving much today. We have our parallel, which remember, as long as we stay within the parallel, the bias remains bullish with upside to 107 to 108,000. If it breaks the parallel, it goes to a neutral bias. Now, why not negative? Well, because you still have the support that you've been bouncing at 91 to 92,000 right here, right? So you can see right here, it hammered on it, broke out, retraced, went up, retraced, and so forth. So this level here between this trend line, upsloping trend line, and this one, this is your neutral zone, meaning that, again, it's more of a 50-50. Can it recover and still go up, or does it break down? Once it breaks down below 91,000, that's where the bias goes heavily negative, all right? So again,
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. In this video, Gareth Soloway shares why Bitcoin could soar above $100,000 and breaks down strategies to become a winning trader and investor in crypto. Let's catch him up to learn more.
Bias right now is bullish, but you know your zones as a trader, as an investor, know your zones of when it's bullish, when it's neutral, and when it's bearish. That will help you trade it appropriately. Gold today, pulling back just a little bit. Again, we had the negation of this wide range red candle. Then you get your couple-day pullback. I would expect it to turn back up next week and gold to head higher here. And again, we'll keep an eye on that. The only thing that would change my opinion on gold here, if we break this bigger parallel right down here around 2,600, if we get below that, then the bias heavily sways to the negative side for a move down towards 2,500. But right now, again, small retrace. Look for that to turn back around over the next few trading days into next week and head higher. Silver has remained bearish the entire time because it was never able to break out. And look at price. It's nearing technical support. Again, maybe you get a small bounce off this, and then I would expect silver to break down. Palladium, platinum, same sort of things, guys, is that these charts are definitely more skewed towards the industrial side. And if silver breaks down, those likely go lower as well. Oil today, let's take a quick look at oil. Trading flat to positive. It did get above this little line here, which again gives it a more neutral to bullish bias for a potential rally to about $74 per barrel, at which case, like I've told you guys, I would be interested in shorting oil at that price. Natural gas still just chopping around here, not much going on, just a lot of sideways chop here, so nothing really in that respect that I'm keeping an eye on. But let's come back here. Now, the key is this. Next week, we have the Federal Reserve meeting. That's Wednesday at 2 p.m. They'll release their interest rate decision, which again, I would say there's about a 95% chance that it's going to be a 25 basis point cut. The kicker is this, right? The markets are already factoring 25 basis points in, right? So there's going to be no surprise there. All right, the markets are already priced for that. What the markets are going to look for next Wednesday is in the 2:30 press conference, is Jerome Powell more hawkish, meaning is he saying, hey, don't even expect more than one rate cut next year? Or is he more dovish saying, hey, we might do 3, 4, 5 rate cuts next year? That is going to be what's going to move the market next week, all right? So again, what does that mean for Monday and Tuesday? It means it might be light. Volume could be very light Monday, Tuesday into Wednesday, and then we get that big decision. Once we get through that, then you're going to Christmas and New Year's, and obviously the new year comes at that point when we'll get the new jobs data as well.
Bitcoin analysts have projected an ambitious cycle target for 2025, starting at $175,000 and extending as high as $461,000. Despite the recent period of sideways volatility, Bitcoin has maintained its strength, closing above $95,000 daily since November 27, underscoring robust buying pressure from investors even at elevated price levels. Research by Bitcoin mining expert Danny Marks suggests these targets are rooted in historical patterns, with Fibonacci extensions playing a key role. Analyzing data from the past 3 bull cycles, Marks found that Bitcoin consistently topped at specific Fibonacci levels minus 3.618 in 2012, 2.272 in 2016, and 1.618 in 2020. Based on this trend, he predicts that Bitcoin's 2025 minimum price will reach the 1.618 Fibonacci level, translating to $173,646, with potential highs exceeding $461,000, assuming macroeconomic stability. Further reinforcing this outlook, miners are showing unprecedented resilience by diamond-handing their BTC. Unlike in 2021, when miners sold aggressively to cover costs, recent data shows a 91% reduction in their net selling activity. This shift, coupled with Bitcoin's breakout above key technical levels, points to continued upward momentum. With Bitcoin trading around $100,000 and institutional demand surging, the stage appears set for the crypto leader to achieve historic milestones as the next cycle unfolds.
Take a look at the chart of the pre-market S&P 500. So what we saw yesterday was a downside move. This was after the PPI data came out and basically surprised at much hotter than expected. So again, inflation is roaring back. We're seeing that. And this is before any tariffs are implemented as well, which historically have been very inflationary. So again, we are seeing that weakness in the markets yesterday. But then after hours, we saw Broadcom report earnings. And Broadcom reported earnings. Initially, the stock rallied to the upside. Then it faded back to the downside and was basically unchanged to just slightly positive. Then they came out with guidance. And their guidance was about as robust and positive as could be. And the stock ripped up and is currently up, I believe, about 16 to 17% pre-market. Now, remember, this is a stock that was just underneath $1 trillion valuation. So this move, if it adds about 15 to 20% today, it's going to hit $1 trillion market cap and join the 7 other stocks that are $1 trillion in the current market. All right, so the Magnificent 7, it might be the Magnificent 8 after today. Now, you can see what happened is as soon as this is right where that guidance came out, right here yesterday in the after hours, and you saw the markets kind of go up and then trend, and then by this morning, everyone was in party mode and the markets have continued up. So we are looking at a positive open on Wall Street led by technology. And again, technology stocks have been strong, but we've seen pockets of weakness, right? We've definitely seen Tesla carrying its load. We've seen Apple doing very, very well, but Apple did put in a topping tail on the daily chart just a couple days away, which is a reversal signal. Now, one of the things I continue to watch here on the NASDAQ is this bigger chart here. This, again, takes your COVID low down here, right? So, again, our COVID low and your bull market high of 2021, your bear market low of 2022, and we are now, based on this, about 250 points away from tagging this upper line. Well, guess what? The NASDAQ right now is up over 150 points. So, are we going to tag this on a Friday today? Will we see the NASDAQ up as much as 250 points on the day, tagging this line? If it does, I have no other choice but to use the technicals to dictate that next week and going into the new year to have a negative bias on the markets and look for that pullback. In fact, we're getting very close to where I'm going to initiate that put position on the S&P, maybe on the NASDAQ as well, based on what I'm seeing in the charts. Now, a couple other things that I wanted to talk about here, folks, is that what we're seeing is some unprecedented breadth being negative in the markets. In fact, for the first time in 25 years, all right, actually about 23 years, we saw something that has, again, not happened since 2001. It was 9 straight sessions of stocks net being negative, even with the market making new all-time highs. Now, what do I mean by that? Well, if you look at advanced decline, there were more stocks declining in the market for the last 9 days than advancing for 9 straight days. The last time that happened was in 2001. So little things like that. It's showing kind of this market that underneath the facade of greatness of, oh, look, Tesla's making a new all-time high. Oh, look at Apple making a new all-time high. Look at Google. Look at all these other stocks. Look at Broadcom today. There's this weakness that is becoming very pervasive, and that can be a sign of trouble lurking in the market.
Bitcoin ETF are rapidly closing the gap with gold ETF, reaching an impressive $100 billion in assets under management (AUM) within just 1 year. This achievement rivals the growth that gold ETF took 2 decades to accomplish, underscoring the growing dominance of Bitcoin as a mainstream investment vehicle. While gold ETFs still lead with $271 billion in AUM, they have seen notable outflows in November and December, shrinking the margin and allowing Bitcoin ETF to catch up. BlackRock's iShares Bitcoin Trust, IBIT, has been a key driver of this surge, attracting $36 billion in inflows by mid-December, with $4 billion added since Thanksgiving alone. Institutional confidence in Bitcoin ETF has grown significantly, spurred by BlackRock's validation of the market. Meanwhile, a supply squeeze is tightening liquidity as 124,000 bitcoins left major exchanges in the past month, fueling upward pressure on prices. Bitcoin's current price, hovering around $101,953 with a market cap surpassing $2 trillion, has further boosted interest in ETF. Analysts suggest that the combination of strong inflows, institutional trust, and diminishing supply could result in a gamma squeeze, pushing prices even higher. As gold ETF lose ground, Bitcoin ETF are poised to become a dominant force in the investment landscape. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.